Hello, entrepreneurs. Joe DeCharis, CPA extraordinaire, coming to you live for another amazing episode of How to Win at Business. And also now, because it's tax season, how to win at your personal income taxes. And before I get started, folks, if you're watching live, give me a hashtag live. If you're watching a replay, give me a hashtag replay, because that will give you access to any of the questions and comments that come up. If you have a question, please put it in the chat and I will be happy to answer it live. And if you're watching the replay, you can put a question in the chat and I will definitely respond to that as well. That's one of the great things about technology and about Facebook and YouTube. You can, once you have it up there, it's forever. And I do respond to any and all of the questions and comments. Also, if you want to book time with me, just go to timewithjoe.com. I'm more than happy to give you some of my time, knowledge, and experience to help you solve the common issues that we all face as business owners and taxpayers. Also, last but not least, we have a free resource mastermind with Joe DeCharo. We meet every Friday at 11:30 New York Standard Time. That's 11:30 a.m. to 1 p.m. We network, we learn from each other, we teach each other, and most of all, we have fun. And we also give away prizes, and you have to experience it to know exactly what I'm talking about. So on to today's lesson. What we're going to be talking about is the monstrosity we call the W-4 form. Now, if you're employed or you have employees, you must fill this out or have your potential and even existing employees fill one of these out. They should fill a new one out every year. Because you sometimes have these disgruntled employees that will go back if they claim 8,000 dependents, you took out no income tax because they told you not to, and then lo and behold they owe taxes and you have nothing in writing. So you want to protect yourself. A lot of the stuff that I share with you is unfortunately to help protect you, number one, from the government, number two, from other people, and number three, from yourself. Because believe it or not, and I'm in the same boat as you, there's way too much complication, there's way too much compliance out there for any one individual to know everything. I heard a radio show, this guy Steve Forbes, if you don't know him, he's a business guru. He's got a business media empire. If you ever heard of Forbes magazine, that's part of his holdings. And what's funny is he said any CEO, any business owner commits felonies on a regular basis. And what he was talking about is that if you follow the letter of the law, without knowing it, without trying, you may inadvertently be skirting some rules, issues. And I always said the IRS could probably nail any business owner for some kind of tax infraction, maybe not tax fraud, evasion, but they can definitely go in there and say, oh, you took 70% of your car when it's less than 20%. And a lot of this stuff is not written in black and white. And in other words, a lot of tax laws, a lot of business practices, we operate on the fringes. Okay. And I'll just leave it at that. So my job is to inform people, try to direct them to follow the rules as best as we can without splitting hairs, without putting us out of business. And this is one of those things that it's easy to overlook. It's easy to not do, but it's becoming harder and harder to not do these things. The government has their grips upon us. I'm getting questions all the time about the digital economy. This was planned decades ago, maybe when Abraham Lincoln was president, they created paper money. That was an interesting fact. They created paper money in a national banking system, only to, and at that time, it was needed. Now we're going into this crypto virtual payment processes, and part of the drawback, or part of the maybe the good part about it, is that it can all be tracked. It can all be traced. There's going to be a lot less cheating, a lot less under the table. But on the other hand, people like me, accountants, uh, are being made the police, the unwitting, unwilling police force, unpaid, of the government, because they want to hold us accountable as professionals, as the segue between them and the taxpayer, the business owner, and holding accountants accountable for making sure that our clients are dotting all the I's and crossing all the T's. So that brings me back to the W-4 form. Now, this is going to be a series of educational, instructional uh, videos that I'm going to be doing uh, to accomplish that. In other words, it's going to be documented, it's going to be available for free to people, and it's going to be simple. One of my jobs is to make what's complicated simple. So I bring this one up because I was on the phone with the client a couple of weeks ago, and our husband was in the background saying, he needs help with the W-4 form because he just got a job, and it's like he's bouncing off the walls trying to figure out how to fill this out correctly. So what I'm doing here is, let's start right from the start, from the top. I'm going to maximize this so you don't you know I won't be in the way here. So obviously, first name, last name, social security number, address. Now, so that's the basic info. Now we come to your filing status. Now, normally you would think that this is cut and dry, but filing status is one of the most misunderstood, categorized items in the tax code. Uh, so let's just keep it simple. I will do a video on filing status shortly, but let's keep it for the W-4 form. So let's say you're married and your wife doesn't work, or let's say you're married and your wife does work, okay, or you're a head of household, or you're single. Now, what I tell people, if you want to be safe, if you want to go the safe route. In other words, have more taken out of your check than what they calculate, then you want to go with single. Okay. So now this isn't like a tax document that's going to be filed with the IRS and you're going to get in trouble for not claiming the right uh, filing status. The whole purpose of the W-4 form is to get an estimate of how much they should be taking out of your paycheck, whether you get paid weekly, bi-weekly, semi-weekly, monthly, annually. They need some kind of way to figure this out. So that's pretty straightforward. Okay, so now step two, multiple job. Complete this step if you hold more than one job or two. So now this is where I tell people, you know what? This this is going to be very, very difficult to get right, even if you try your best. Even you could be a CPA and fill this out to the best of your ability and still not get it right, because at the end of the year, you're going to find out if you were right or you were wrong, because you're either going to owe money or get money back. So now, if these were actually 100% accurate, you would break even. I've never seen that happen. Not when somebody had taxable income and they had withholding from one job, even for one job. So even a taxpayer that was single with one job, they could fill this out exactly how it's going to be on their tax return, and they usually wind up getting money back. Well, that's not a coincidence, because if the government's going to overestimate or underestimate, they're going to overestimate a little on their side, because they would rather have the money in their pocket than you have to pay them at the end of the year. That makes sense to me. But if it was 100% accurate, it would come out to zero. No money due, no money refunded. So once you get into this thing, you start getting into unmeasurable complications. So what I usually tell people is, if you have multiple jobs, claim single, okay, or married filing jointly with zero dependents, because that's where they're gonna take the most amount of money out. Now, let me tell you why I tell people to do that, because even when you do that, they're not going to be taking out enough. And I'm going to show you something here, and I hope it doesn't scare you. These are the tax brackets. And so they want you to actually try to figure out, okay, based on this, what are you going to owe at the end of the year? And if you're a mathematician or an accountant or an actuary, maybe you want to try this. But you could, or you could just take my word for it. So it's based on, our tax system is based on a graduated rate, meaning the more you make, the higher per dollar you're going to pay. So, for instance, let's take somebody that's going to make $1,000 a week in 5 different jobs. Okay. So, normally, if you're making $1,000 a month, they're going to take out X amount of dollars. Let's say it's, so what they do is they say, okay, you're going to get X amount for a standard deduction. They're actually going to take out very, very little. Okay. They're going to take out very, very little, because a single person has over a $12,000 standard deduction now. So if the IRS is figuring this out based on a job where you're making $12,000 a year, what if you have 5 of those jobs? So each job, you're going to have $12,000 a year, $1,000 a month. They're going to you fill out the W-4 form correctly, and at the end of the year, you don't have 12,000 in revenue, in income. You have 60,000. Okay. So at $60,000, you're paying some taxes. And according to the W-4 form, they're saying you're not going to pay any taxes. Now, the same thing happens if you work overtime or you work by the hour. Because what if one week you work 80 hours and next week you work 20 hours? So that's why these W-4 forms don't work. So anytime a wage earner has to fill one of these out, I say do single, zero, keep it simple. Okay. Uh, if in the event you are a married or single person, you only have one job, you get a regular salary, and you want to just, take home, you want it to be calculated by them, you don't want to have to worry, you just put down single, zero, no other income, no other and that's it. So all you're filling out is this top part, step one. Okay, that's what 90% of the people should be doing. Just fill out part one, step one. So step 2 to 4 is only if you want to complicate things. If you're going to have other income, then you take your chances on calculating it. You sign it, get a copy of it. You should always get a copy of every tax document that you sign. Keep it for your records. Okay. And go with that. So now what to do if you're nervous about if you're going to owe money or pay money at the end of the year. Well, one of the things that I recommend is that you need to educate yourself. You need to educate yourself on your pay stub and your tax return. You need to look at your tax return and let's assume that it's consistent. Let's say every year you make 60,000, you have X amount of money withheld. You can look at your tax return and say, "Oh, last year I got, an $8,000 refund. They're obviously taking too much money out." Or last year I had to pay 5,000. They're obviously not taking enough out. Okay? So based on that, around the end of June, what you want to do is you want to look at your income and your withholdings, multiply it by 2, and plug those numbers into your tax return. Okay, you don't have to be a math genius, and all you have to do is know how to do a Google search. And there's all kinds of tax calculators out there that are accurate, and you could tell them this is what I want to do, and it'll calculate it for you. So now if you're over withheld, you always have the option of filling out another W-4 form, going to your employer and say, hey, now I know where I stand, and I'm going to be about $6,000 short. So I only got 6 months left. So over here on line on step 4, line letter C, you ask them for another $1,000 a month in additional withholding. Okay. Now, if you're over withheld, you could also tell them that you want to claim more deductions. Okay, more than the standard deductions. Now, that's the only way to get them to lower how much they're going to take. If you got a small company and your boss has a good accountant, they could go in and just adjust how much they're withholding if you're taking out too much. Okay. Gone are the days when you can say, I have, 10 children, and lower how much they're going to take out. So you might have to, do some of this manually. You might have to go to your payroll department and tell them, listen, this is how much I want. I want taken out, or how much I want to pay in extra. Now, another way to do it is to actually send in an estimated tax payment. Okay, let's say you sold a stock, you hit big on oh, bless me, you hit it big on crypto, and you got a $50,000 profit. Just take whatever the effective tax rate is, and you could figure that out again if you don't have an accountant. Go online, say, okay, from my job, I'm going to make 50,000. I got another 50,000 in short-term capital gains or long-term capital gains, whatever it is, and do a tax projection. And then you could send in an estimated tax payment. Okay. And again, if you want to know how to send in an estimated tax payment, it's very simple, folks. Just Google, how do I send in an estimated tax payment to the IRS? And I guarantee you, I'm not going to do it right now, but if you do it, you will find the answer. And if you don't, and you still have questions, I still invite you to go to timewithjoe.com and book an appointment with me, and I'll gladly walk you through the steps here. Okay. Also, I would invite you to go to our website, bedrockbusinessbuilders.com, where we continuously add more tools and resources on the site. You'll find the software that we use, the people that we use to, provide excellent service at affordable rates for small business owners and taxpayers that normally can't afford, or think that they can't afford, to use a CPA. So that's my story. I'm sticking with it. God bless. And I will see you soon with another amazing episode of How